Hello, everybody. This is Brad Lewis with Premier Marketing. Hey, we're excited to have you on the call today to learn about a brand new product from our friends at Guarantee Trust Life, or GTL as we like to call them. So we're going to talk today about a new whole life product that has great cash value or cash benefits to it that can help you address long-term care concerns with your clients. And I actually have three special guests on the call with us today. So I have Nick Polish, Liz Christopher, and Tierney. I'm not going to destroy your last name, so I'm sorry. I should have asked how to pronounce that before I got to this part. But I have Tierney on the line with us as well. So we're going to turn it over to them and let Nick and Liz take over and tell us a lot about the new product, Home Life Secure with GTL.
Well, greetings and many thanks for the warm introductions. As Brad had mentioned, my name is Liz Christopher, and I'm joined by my colleagues Nick Polish and Tierney Beauregard. We are thrilled to be with you today to introduce an innovative solution which combines insurance with navigation and advocacy resources. Now, we know you don't often associate insurance with innovation, but after today's session, we hope you come away with just that. A different way to think about insurance, and a robust offering to enable your clients to realize their dream of aging at home as safely, as independently, and as long as possible. Now, before we get into the product details, I did want to provide a little bit of background and context on why we designed this solution offering. So all of our employees have either been a caregiver or have had to search for caregiver services for a family member or a loved one, as I'm sure many of you and many of your clients have had to do as well. We know the majority of people want to age at home now more so than ever, yet the emotional and the financial burdens can be overwhelming, both to the individual and to their caregivers. And in addition, the healthcare system is disjointed and fragmented, especially within the short-term and long-term care spaces. And if you couple all of this with the misunderstandings and misperceptions of what Medicare will cover, it's no wonder that there's a problem. In fact, the average person will consume roughly $50,000 in unreimbursed custodial healthcare expenditures in their lifetime, most of which is not budgeted or planned for. It's a massive blind spot for so many, one which results not only in having to make difficult decisions from where a loved one ages, but also to the quality, to the access, and to the type of care that they may receive. And as this slide shows, the annual cost of care ranging from part-time home health care up to a private room in a skilled nursing facility is steep. These figures, however, can be beneficial as they can help facilitate a discussion with your client on how much things actually cost, which is usually an eye-opener for most, as most people are really surprised to learn that Medicare does not cover long-term care needs. And on a very somber note, these expenditures are the primary reason that individuals file for bankruptcy later in life. So 1 in 8 bankruptcies are for individuals over the age of 65, and over 21% of bankruptcies are those individuals aged 55 to 64. It's these statistics that drove us to conduct an elder care survey focused on the financial burden of caregiving. So 70% of our respondents stated that they would prefer to age at home, yet 2/3 of them said that they wouldn't be prepared to cover the costs. On a positive note, however, 55% of individuals expressed a strong intent to purchase a product specifically designed to help them and their loved ones age as they want. And that's what brings us to Home Life Secure, our integrated solution, which combines insurance with advocacy and navigational supports to provide your clients with the tools, the resources, and the financial security to age at home. So when we set out to design this product, we had 4 main objectives. So 1, we wanted it to be simple. Clients only need to answer one question regarding the policy. Thus, it's easy for you to explain to them and easy for them to understand. They simply decide the desired face amount ranging from $10,000 to $150,000 in $5,000 increments. 2, we wanted it to be flexible. While the product is whole life based, it also provides accelerated death benefits for chronic conditions and for terminal illness. So your client gets to decide when and how much to accelerate at the time of need. Thirdly, we wanted it to be attainable. With only 6 eligibility questions, our simplified underwriting process yields high acceptance rates in the 85% range. Thus, it's a good use of your time as well as that of your clients. And then lastly, we wanted it to be affordable. Based upon our simplified underwriting and our 2-year grading processes, we offer extremely affordable rates. And really, we like to think of it as the best of both worlds, right? You get simplified issue underwriting, but with medically underwritten rates. So on the low face values, we're very competitive with final expense offerings. And then in the upper higher ranges, we offer a more affordable option to expensive and hard to qualify for fully underwritten hybrids and traditional long-term care policies. And so with that, I'll turn it over to Nick to provide some additional details on the product.
Great, thank you, Liz, and hello, everyone. So I'm going to spend a minute or two on this slide reviewing the eligibility and pricing for Home Life Secure. First, focusing on eligibility. There's just 3 basic requirements. First, your client must be entry age 18 through 85. Secondly, be a legal resident of one of the 44 states where Home Life Secure is currently available. And then finally, be able to meet the 2-part underwriting requirements. Part 1 is the ability to answer no to each of the 6 knockout questions. And then the second requirement is to fall within the height and weight parameters. And we'll take a look at the available states and a summary of the knockout questions and bill chart in a few minutes. Now, from a pricing perspective, typical of whole life policies, premium rates are a function of entry age, gender, tobacco use status, and policy face amount. And each individual age will have its own entry rate. The policy is guaranteed renewable, and rates are fixed as long as the policy is held. And under that scenario, individuals are advantaged by purchasing a policy as young as possible. So to give you an example, a 50-year-old non-smoking male would pay $321 a month for a $150,000 policy. But if they waited to age 60, that same policy would cost $527 a month, or $200 more. The final pricing consideration I'd like to share is that there's a 10% spousal discount if Home Life Secure policies are applied for at the same time. It's important to note that each spouse will receive the 10% discount, and if one spouse does not ultimately qualify, the other spouse will still receive the 10% discount. So let's take a look at some of the key plan features. So available face amounts range from, on the low side, $10,000 up to $150,000 in $5,000 increments. And the core benefit has 2 accelerated death benefits embedded within it, one for chronic conditions, the second for terminal illness. So let me describe each separately. First, chronic conditions. So what is it? It's a physical or cognitive impairment expected to last 90 days or more, very similar to traditional long-term care. Physical impairment is the inability to perform 2 or more of the activities of daily living, such as bathing, eating, dressing, or a cognitive impairment is a dementia diagnosis, for example. There's a waiting period of 90 calendar days before the accelerated benefits begin, and it is at the point of need that your client has a decision to make as to how much to accelerate. So they could either take a lump sum distribution of 50% of the available death benefit, or alternatively, they can take a monthly distribution from 1 to 8% of the available death benefit. Further, if the monthly distribution approach is selected, your client can prospectively increase or decrease that distribution percentage one time as their needs change. Now turning to the terminal illness accelerated rider. So first, it's defined as life expectancy of 24 months or less. Individuals who qualify can accelerate 25, 50, or 75% of the available death benefit. And it's important to note that if they initially accelerate 25 or 50%, they can make a second or third election to accelerate up to the full 75% available. Two other important features associated with the accelerated distributions. The first is if your client qualifies for one, whether it's chronic condition or terminal illness, the premiums are waived. Secondly, the accelerated benefits collectively are capped at 90% of the available death benefit. And this was designed to preserve 10% of the face amount as a residual benefit for the beneficiary. And then the final feature I'd like to share is the 2-year grading period. So let's review application of the grading period based on the cause of death. So if death was the result of an accident during the first 2 years of the policy, the beneficiary would receive 100% of the death benefit under the temporary accidental death provision. On the other hand, if it was a result of a health condition and it occurred in the first policy year, the beneficiary would receive 150% of the paid premium. If it occurred in the second policy year, the beneficiary would receive 50% of the face amount. And then if it occurred on the first day of policy year 3 and beyond, the beneficiary would receive 100% of the death benefit with no exclusions, regardless of cause. So let's talk a little bit about Home Life Secure as a financial planning tool. So this slide exhibits the financial planning spectrum and the various roles that Home Life Secure can play in meeting your client's financial needs. So for example, if we focus on the left side of the slide, Home Life Secure represents a cost-effective solution for clients who need a final expense policy. Home Life Secure will generally be up to 30% less expensive since it's simplified issue versus guarantee issue for many final expense policies. As well, it includes all of the Home Life Secure policy features I just highlighted, which most final expense policies would not include. Now, if we focus on the far right, Home Life Secure represents an alternative to hard to qualify and unaffordable traditional long-term care and single pay hybrid life insurance policies. Remember, Home Life Secure's acceptance rates of 85 to 90% versus 65 to 70% for long-term care and the hybrids. As well, Home Life Secure rates, unlike traditional long-term care insurance, are guaranteed for the life of the policy. And for those of you who serve the employer market, the group market, Home Life Secure is an attractive and voluntary employee benefit. And because it's not an ERISA plan, there are no annual filing disclosures, discrimination testing, or minimum participation requirements. As well, there's an expanded addressable market as eligibility can be extended to spouses, parents, and in-laws. Finally, because Home Life Secure premiums are paid through bank draft, there are no payroll deduction considerations with which to increase policy persistency and keep those renewal commissions coming. So let's talk a little bit about the application and enrollment process. So Home Life Secure will be quoted and enrolled through GTL's e-app, which is their online quoting and enrollment tool. There are 6 knockout questions. 3 are related to the long-term care risk and 3 to the mortality risk. If your client must respond yes to any one of the 6 questions, they are ineligible for coverage. However, there are situations where sometimes it's unclear as to how to apply your client's health situation to a particular knockout question, and you can always contact the GTL underwriter via text, call, or email for a consultation. So let's say you took your client through the process and you hit the submit button. Once you do that, you and your client will receive an email thanking them for their application and indicating that it's under review. Behind the scenes, the Milliman RX database is used to confirm your client's responses to the knockout questions. And a decision on each application will be made in 1 to 3 business days. So if the Milliman database aligns with the knockout question responses, you and your client will receive an email that the application has been received with a link to the electronic version of the welcome package. However, if there are questions or if additional information is warranted, a GTL underwriter will contact your client by phone within that same 1 to 3 business timeframe. So let's take a quick look at the question summary and bill chart. So on the left side of the slide is a summary of the knockout questions. These are not the full questions themselves, but a summary. The first 3 questions, as I mentioned, are related to the LTC risk, and then the next 3, the mortality risk. So as you're skimming through the questions, the summaries, I'll leave you with these thoughts. The process is simple, with underwriting decisions made in 1 to 3 business days, and it's easily attainable with an anticipated acceptance rate of 85 to 90%. Now, on the right side of the slide is a portion of the height and weight chart. So just a few things to note here. First, it's a unisex table that applies to males and females. The full table runs from 4'8" to 6'11". And I think you'll agree that the weight bands are very generous, particularly as it relates to the maximums. So let's talk about where Home Life Secure is available. So Guarantee Trust Life filed Home Life Secure through the Interstate Insurance Compact. And when it was approved, it became available in the 44 states that are in green. So here's a quick summary of the 6 states in gray. So South Carolina has been filed and approved, and it should be available within the next 30 days. Florida has been filed and is in active discussions with GTL, and we expect to be live in Florida within the next 60 days. Both North and South Dakota will be available in Q3 of this year. California will be available in the second half of 2023, and that's because it literally just takes that long to work through their Department of Insurance. And because GTL is not admitted in the state of New York, Home Life Secure will not be available in New York. So let me turn it back over to Liz to discuss the resources and discounts and services that are part of Home Life Secure.
Great, thanks, Nick. So now that we reviewed the insurance component, let's take a little bit of time to focus on our advocacy and navigation support. So as we highlighted before, we were very purposeful in the design of both the product and what we're calling these wrapper services. So since we've been in this position ourselves, either being a caregiver or having to seek or search for caregiver services, we know how overwhelming the process can be. And in addition, with our vast experience in the insurance industry, we've seen far too often that people don't learn about their insurance, right? They don't understand their benefits and their coverage, and they don't look into it until they're sick and at their most vulnerable. Thus, they're not usually equipped to make the best decisions. Therefore, we wanted to bring together the tools, the resources, and the navigational supports to help individuals and their caregivers in advance of their time of need, so they have increased peace of mind. And as part of this peace of mind, we wanted to ensure that our offerings provided valuable benefits and discounts which align with our mission to enable individuals with the help they need for the life they want. And the beauty about these benefits and discounts is that they're available not only to the policyholder, but to their immediate family members as well. So just to give you an idea for what we mean by these types of offerings, we divided them into 2 main areas here. So resources ranging from free online self-service tools up to discounted personalized care coordination provided by a dedicated advocate who's trained in elder care. They can provide assistance with vetting care services, coordinating transportation, and can even help reconcile medical bills. And discounts and special values for frequently used goods and services, such as durable medical equipment and will and estate planning services. So these elements work together to educate your clients on the emotional, the social, the financial, and the operational components to be able to age confidently. So you're probably thinking to yourself, okay, we have the insurance and we have the advocacy, but what does it really all mean? So we created 2 personas, Ray and Sally, to bring all of these elements together and make them real for you. So both Ray and Sally realized their need to plan for their aging and caregiving needs. Ray, based upon his experience as a caregiver for his own mother, and Sally, due to her family history and her knowledge of increased healthcare costs as she ages. With that in mind, both Ray and Sally purchased Home Life Secure policies. Ray purchased a $100,000 policy at the age of 65 for $461 a month. Sally purchased a $150,000 policy at the age of 55 for $375 a month. Now, I did want to point out, we were very particular about these examples we're using, both from a policy face amount and from an age perspective, because we wanted to demonstrate that by signing up at a younger age, Sally is able to afford a richer policy for less than what Ray is paying. Now, unfortunately, in year 10, Ray receives a terminal cancer diagnosis and he requires in-home care. So Ray chooses the 75% lump sum terminal illness accelerated payment, and he receives a check for $75,000 to cover the care that he needs. After he passes, his family receives an additional $25,000 to help cover his final expenses and provide additional financial support. So after 10 years, Ray paid premiums roughly in the amount of about $55,000, yet he and his family benefited from the full value of the $100,000 policy and the wrapping support services. Now, Sally, on the other hand, she takes advantage of the accelerated chronic condition benefit. When Sally's heart disease makes it difficult for her to maintain and manage her daily care, she begins receiving monthly checks in the amount of $3,000, which represents 2% of her policy face amount. As Sally's condition worsens, however, she takes advantage of her one-time benefit change and accelerates her monthly payments from $3,000 a month to $12,000 a month, which now represents the maximum 8% of her policy face amount. By the time Sally passes, she has accelerated payments up to 90% of her policy face amount, leaving $15,000 to her family to cover her final expenses and additional financial support. Now, both Ray and Sally took advantage of the advocacy and support services to create their own aging plans, as well as to provide care coordination for themselves and their immediate family members. They've leveraged their online tools and they shared these plans with their families, enabling them to live the lives that they wanted with increased peace of mind. And now I'll turn it over to Nick to close us out.
Great, thanks, Liz. So now that we reviewed the insurance product and the relevant wraparound services, let's bring it all together. So this chart compares and contrasts Home Life Secure with traditional whole life, long-term care, and the life LTC hybrids. As you can see, Home Life Secure on the far right, checks all of the key boxes and the key product features. And let me just highlight 5 for you. First, high acceptance rates of 85 to 90% versus 65 to 70% for long-term care in the hybrids. Secondly, premium rates that are fixed for the life of the policy. Third, flexible accelerated death benefits determined at the time of need for chronic care and terminal illness, with the ability to modify elections over time should needs change. Fourth, other standard policy features, including the waiver of premium and the 10% residual benefit for beneficiaries. And then fifth and finally, all of the surrounding services, including advocacy and care navigation and a digital estate planning. Let's talk a little bit about the opportunity. So why introduce your clients to Home Life Secure? Well, it represents opportunities for your clients and for each of you. Each of you are trusted business advisors to your clients. And here's an opportunity to reinforce that position by educating them on a potential gap in their financial plan and introducing them to a solution to protect their future and provide them with peace of mind. We realize your time is your most precious resource. Thus, we designed Home Life Secure to experience a short sales cycle with a simple design and literally one client decision. 2, affordable premiums. 3, high acceptance rates. 4, serve as a final expense or alternative to traditional long-term care and single pay hybrids. And then finally, an efficient enrollment process, which takes 10 to 15 minutes to complete. So let's talk a little bit about resources and support. It goes without saying that all of us are laser focused on your success. We've developed a number of client-facing materials, such as the explainer video for consumers as well as agents, product brochure, and customizable infographic and postcard, along with many other marketing assets to assist your efforts. As well, we're fully leveraging GTL's technology platform, including eApp, their online quoting and enrollment tool, and GT Link, their agent portal. So what's next? If you're currently contracted with Premier and appointed with GTL, congratulations, you are ready to introduce your clients to Home Life Secure. However, if you're not, please contact Brad Lewis. His contact information is on the screen, and he and his team will get you quickly contracted and in the market. So with that, that concludes an overview of Home Life Secure. We thank you for your participation, and let me turn it over to Brad, who will moderate a Q&A session.
Perfect. Thank you very much, Nick and Liz. I appreciate you guys going over the presentation. That was excellent. Definitely saw a need for the product, just thinking about a couple current situations that my family and a few friends' families are going through right now, and certainly wish we had the opportunity for a product like this a few years ago, to be honest. So if you have any questions, please enter them into the question box right now. We want to make sure we get those answered for you to see if you have anything you'd like to learn more information about. I did have a couple questions that I wanted to ask, just that came to mind from my standpoint as I listened to you guys present. You guys talked about taking the monthly payments and also the one-time availability to change that amount. Can you talk about maybe the minimums that you can take out per month and the maximums, and then how long those benefits last as well, and kind of a little bit more detail on, because I think that's an important feature, because a lot of people are looking to cover monthly costs.
Sure.
So that's an excellent place to look at.
Yeah, happy to elaborate on that. So when someone qualifies for a chronic condition accelerated payment, they first have an irrevocable decision to make, and that is whether to take the 50% lump sum or the monthly distribution. So let's assume they take the monthly distribution, and they can take as little as 1% or as much as 8% of the available death benefit as a monthly distribution. So let's say, for example, somebody in year 5, I'm just making this up, of the policy, qualifies for a chronic condition, and they had a $100,000 face value policy. They could take an 8% or $8,000 distribution. And if they do that, they will receive $8,000 a month for 11 months. And then in the 12th month, they'll receive a $2,000 payment. And then the monthly distributions will stop because they will have hit that 90% cap of the face amount. Now, if somebody took, so basically in that scenario, the benefit was exhausted in effectively 11 plus months, because they maximized the distribution at 8%. On the other hand, if your needs are on the lower end and you take 1% distribution, that will last, I can't do the math in my head, but that'll last over 6 years, probably closer to 7 years, because you're only using 12% of the benefit each calendar year, or each 12-month period, I should say. And it's 90% divided by 12. So it's like 7.5 years. So basically the period of time with which you can take monthly distributions are driven by the percentage. And on the low end, if you take a low percentage, it will make the distributions last 7.5 years roughly. But if you take an 8% distribution, they will last about 12 months effectively.
Perfect. That's great. I know that's important for clients that are looking to match what their current income is to satisfy any additional expenses that they have, and the fact that you allow a change in that is very nice, that they can make that change if their care needs change as well. So that's a great feature. I do have a couple questions here. If no monthly payments are taken for critical, chronic, or terminal, does the beneficiary get the entire face amount at death, or what do they get there?
Yes, the entire face amount at death. If there have been no accelerated benefits and no policy loans, the beneficiary receives the death, the face value of the policy.
Okay, perfect. And on the side of, we do have the slides available, so we'll be able to get out a client-facing presentation for you, as well as some training material that you can have. That was another question that we had here. When you said it's competitive with traditional final expense, we talked about that going up to about 30,000 where it's competitive. Are there still these types of benefits available on a policy that small as well?
Yes, so every Home Life Secure policy, regardless of its face value, come with the accelerated distributions for chronic care and terminal illness. They come with the waiver of premium benefit. They come with the 10% residual benefit. So it is literally the same product regardless of the face amount. It's just that, as you pointed out, Brad, you typically think of final expense policies as, in that $10,000 to $30,000 range.
Yep, perfect. And then we talked a little bit about the market, where you see this fitting for agents to speak with their clients. Can you talk a little bit more about who the ideal client would be? And you guys have some great supporting material to reach them as well, so you make it easy that way too. But it'd be nice to hear that again, who you think the ideal client is for this type of product.
Yeah, it's really kind of middle class Americans. So people with incomes of, let's say, like 50,000 to 250,000. That's basically. Oh, this is even a better view of it. So let me give you. Thank you, Liz. Let me give you a quick orientation to this slide. So this represents the number of households in the United States, and it segments them by wealth and retirement status. So there are 126 million households in the United States, and every block that you see here represents 100,000 households. The blue blocks are actively employed individuals under the age of 55. The green are actively employed individuals age 55 and older, and then the yellow are retirees. And then they're further classified based on investable assets. And so if you look at the, below the blocks there on the far left, low net worth, assets of less than 100,000. And then on the far right, you've got the mega millionaires, assets of 3.5 million or more. We believe that the sweet spot for this product are folks that are in the, more or less the upper quartile of low net worth to the lower quartile of high net worth. And there's probably, oh gosh, like 50 million families that are in that category. So it's a pretty significant number of individuals that would qualify. So that's kind of it from like a macro level. But when you start thinking about it like on an individual basis, it could be somebody who perhaps cannot qualify for medically underwritten long-term care or hybrid, or someone who can't afford, and most middle Americans, quite frankly, can't afford to write a six-figure check to buy a hybrid policy. So it might be affordability issues from the point of purchase. It could also be affordability issues over time. Again, I'm thinking now about long-term care insurance when I make that statement. But let's just say, for all intents and for the sake of argument, that a comparable long-term care policy with Home Life Secure costs the same on an annual basis. The issue is with Home Life Secure, that premium rate is not going to change over time. But on the other hand, with that long-term care insurance product, those rates can change as often as yearly, and they can change quite significantly. So there's affordability at the point of purchase, and there's also affordability over time. What is someone's ability to be able to keep the policy over time, should costs increase? And then, when you think about other use cases, would be folks that, are in their 40s and experienced a loved one, like you just mentioned, Brad, you shared with your family and friends. We all have situations where we watched, a parent, a grandparent, or another loved one, go through a physical or cognitive decline, and the consequences of them not having a plan in place, both a financial plan as well as their wishes, codified in a will and advanced care directive. And so, again, I'm kind of rambling here, but these are all the different types of qualifications and individuals that I think would benefit from hearing about a product like Home Life Secure.
Perfect. I love always hearing about the demographic of who we should be talking to about a product. One of the things I think of when I look at this product and heard what you guys talked about today is probably the most valuable thing that it gives you is your clients is time to make decisions, time to make the choices that they need to make that might be really difficult for their loved ones. And it does so at a very, very affordable price for those clients as well. And I think that's overlooked sometimes because anytime you get into a situation like this, that's the first thing we ask for is more time, right? So
Yeah.
I think that's very, very valuable. So, but I don't have any more other questions. Nick and Liz, do you guys have anything else you'd like to close out with today?
No, other than thanking everyone for taking time out of their busy day to spend, some time with us today, learning about Home Life Secure. And we look forward to working with all of you in the future.
You bet. Yeah, I'd like to say that as well. Thanks everybody for taking time out of your day. We're looking forward to working with you with this product and helping you cover your clients, another area of your clients' needs out there today. So please reach out to us, give us a call. Our number is 800-365-8208. And you can either ask for myself, Brad Lewis, or Kathy Elkins' team. So that'd be Kathy Elkins or Kelly Rarden. They will be supporting you with this product as well. So we're anxious to talk to you and to learn how we can help you meet your clients' needs and grow your business as well. Thanks everybody for being on the call today. Have a great day.
Thank
Thank
you.
you. Bye, everyone.
Bye-bye.